The Trifecta benefit plan is an employee benefits program that offers health insurance benefits, wellness benefits, and retirement benefits. It offers big company benefits to companies with less than 1,000 employees. It's designed to give employees a completely different employee benefits experience. Now, the cornerstone of the program is a GAP plan that has a wellness benefit that gives employees better overall coverage. A GAP plan is a supplemental insurance plan that covers the gap in coverage that your major medical insurance plan doesn't cover, things like deductibles and coinsurance. The GAP plan reimburses employees up to $5,000 for their first $5,000 in medical claims, excluding doctor visit copays and prescription drug copays. Now, in order to qualify, the employees take a biometric exam once a year at open enrollment, at no cost to the employee and at no cost to the business owner either. The examiner comes out with us on site at open enrollment, and the entire exam only takes about 3 to 4 minutes per employee. Now, once enrolled, if and when the employee has a medical claim, the employee snaps a picture of the bill with their smartphone, which uploads it to the GAP Plan's app. The app then notifies the GAP insurance carrier, and when they receive the notice, the GAP insurance carrier then deposits the claim amount, up to $5,000, into the employee's checking account electronically, so the employee can pay their medical bill after they receive that deposit. Now let's replay that one more time. Again, the employee does their annual biometric exam at open enrollment. Whenever they have a medical claim, they snap a picture of it on their phone, and the app notifies the GAP insurance carrier, who then deposits that amount into the employee's checking account electronically, so the employee has the cash to pay their medical bill. So as an example, let's look at a $6,000 claim, because most employees don't really understand how their health insurance plan actually works. On a $6,000 medical claim, the employee would have to pay their plan deductible first. In this hypothetical example, let's say their deductible is $3,750. Well, that would leave $2,250 remaining. And if the plan's coinsurance covered 50%, the employee would have to pay the other 50% of the remaining balance, which would be $1,125. So with the deductible expense and the coinsurance expense, the employee would have to pay $4,875 out of pocket. But the GAP plan pays up to the first $5,000 in claims, which wipes out the $4,875 expense completely. Now, the only things the GAP plan doesn't cover are prescription drug copays and doctor visit copays. So on this plan, the doctor visit copay is $45. And assuming the employee has a follow-up doctor visit after these claims, the employee's total out-of-pocket cost is only $45 versus over $5,000 if they didn't have the GAP plan. So you're probably wondering, how much does the GAP plan cost? Well, the net cost of the GAP plan is only $39 for a 28-year-old single male. Now with that, they also get a health coach and a nutritionist, which is part of the wellness program, and they're eligible for $50 bonuses each time they communicate with the health coach, up to 2 consultations per month. Now, they can do this by scheduling a phone call, or they can chat with them online, or they can text them directly, or if they have a Fitbit, they can have their Fitbit upload health data to the health coach as well. And each time they do one of these things, the employee receives a $50 wellness bonus, which is electronically deposited into their checking account, and they can receive up to 2 $50 bonuses per month. So basically, they're eligible for up to $100 in wellness bonuses per month. So if the net cost of the plan is $39 per month, and they receive $100 in wellness bonuses per month, they actually make a $61 per month tax-free gain. Now, how does this work mathematically? Well, let's take a look. Now, without the GAP plan, if the employee is on a $4,000 a month salary, they'd be taxed on the full $4,000, which means that $1,200 would go to pay taxes to the IRS and to the state, assuming a 30% combined tax bracket, which means the employee would receive an after-tax deposit of $2,800 per month in their checking account from payroll. Now, if they had the GAP plan on that same $4,000 in monthly salary, they'd get a payroll deduction of $484 pre-tax for the GAP plan. Now that's the premium. Now that means they'd only pay taxes on $3,500 instead of $4,000, saving them $145 in taxes, which means they'd end up with a little over $2,400 in after-tax income hitting their checking account each month. But they'd also receive $400 in wellness bonuses. Now that's the 2 $50 bonuses for talking to their health coach, plus an additional $300 per month, every month, just for doing that one-time biometric exam at open enrollment. Now, these bonuses hit on the exact same day as payday hits. So this employee would see deposits totaling $2,861 per month, increasing their net pay by $61 each month. Now that $61 is then rolled into a benefits bank, which allows them to buy life insurance and disability insurance with these funds. So zero net cost to the employees, and now they have 100% coverage for the first $5,000 in medical claims, excluding doctor visit copays and prescription drug copays. They now have over $100,000 in life insurance to protect their family, plus disability insurance in case they get injured or get diagnosed with an illness and they can't work to earn a paycheck. So this is a 28-year-old single male. Now, a $61 benefit bank is pretty great, but what if you're not young and single? Well, a 39-year-old single mom with 2 kids would get a $32 per month benefit bank, and a 46-year-old male with a spouse and kid will get a $182 per month benefit bank. And even if their spouse and kid are covered by their spouse's medical insurance, they can still cover them on this plan. And even if an employee isn't even on their employer's health plan because they're on their spouse's employer's plan, they can still be on this plan and generate a nice benefit bank so they can get these extra benefits that not only cover them, but also cover their family too. So the concept of this plan is exactly the same as what you're already doing as an employer. You give your employees the option to cover their dependents on your health insurance plan as long as they pay for it, right? Well, it's the same thing with this program. It doesn't cost you a dime. Your employees get 100% coverage from the GAP plan up to $5,000, and it doesn't cost them anything, and it doesn't cost you anything either. They get a free biometric exam so they can see how healthy they are and what areas need to be addressed and improved, and this doesn't cost you anything either. They get a personal health coach and a nutritionist at no cost to them and at no cost to you. They get disability benefits and life insurance, both of which are funded by the benefits bank we create, so it costs them nothing, and it costs you nothing. And on top of all that, your company saves on FICA taxes because all of these payroll deductions lower your overall gross payroll, which is what FICA and workers' comp costs are calculated based off. So how does an employer save on FICA taxes? Well, let's look at that 46-year-old employee with the spouse and kid. Now, with the GAP plan, their taxable income is reduced from the payroll deductions, which means that the employer saves a little over $100 per month in FICA taxes on just this one employee. Now, there's a nominal administrative fee of $39 per month on this plan, but that's washed out by the FICA tax savings. So the net monthly savings on this one employee alone is over $73 per month, which is over $881 in net FICA savings per year. So if 40% of your employees were like this one, and 60% of your employees were young and single, on the right side of the screen, here's an estimation of how much you'd save per year based on how many employees you have. I mean, that's pretty darn significant. And what could you do with that savings? Well, you could apply it to our proprietary business owner pension alternative program and set up a nice retirement income for yourself, completely funded by your FICA tax savings. Now, normally this program requires that you have a minimum net worth of $5 million, but at the Darren Sugiyama Companies, we have a special program that only requires an income of $200,000 per year and a net worth of $500,000, or $400,000 income per year with zero net worth requirement. Again, something proprietary to the Darren Sugiyama Companies. So in summary, your employees get 100% medical coverage for the first $5,000 in claims, which comes at a net zero cost to them, and even creates a benefit bank for them that they can apply towards a retirement fund as well as life insurance, which comes at a zero net cost. Now, as the employer, you're able to offer your employees richer benefits at no additional cost to you. Plus, you save money on FICA taxes that you can apply towards your own retirement. And in our proprietary pension alternative program, if you were to put away $50,000 per year for 10 years, you could have a tax-free income as much as $122,000 per year for 26 years. I mean, really, can you think of any reason why you wouldn't want to do this, both for you and for your employees? Now, it's really a no-brainer. The Trifecta Benefit Plan, brought to you by the Darren Sugiyama Companies.